Hey, g'day, Rudy here. So this video is all about our property trusts, the REITs on the ASX, and I reckon they're a bit top heavy. Had a bit of a sugar hit with a drop in short-term interest rates. So let me go through it. We're looking at the Aussie 1 year. So we'll look at the interest rates first. I'll explain why. So the Aussie 1 year is a downtrend. The Aussie 10 year is not. Now that's because the 1 year is influenced by the RBA rate. The 10 year is influenced by what people in the market are prepared to pay for it. And I believe we're in an inflationary environment, and so people are wanting higher interest rates if they're going to lock it up for 10 years. So that does not look bearish to me, which is negative for REITs, for property trusts. Why? So this is the XPJ. This is property REITs. So why? Two reasons. One is they borrow. They usually borrow a lot of money to fund these things. So longer term rates means less profit. And two, they're usually valued on a cash flow basis. So it's not necessarily an increase in the value of your property like a residential house. So they take the rental income and they discount it back at a discount rate. So the higher that discount rate is, the lower what they call the net present value is. So as long-term rates go up, the value of the thing goes down. So that's the theory. But if we go to the charts, so this is the XPJ. And you can see we're at the top of the range. And I'll just try and show you this. So if we overlay, so the purple line is the 10-year bond yield. Okay, so from about 1998 to around, it was trading at around 6%. Then we had the GFC and just everything tanked. Then the long-term rates started dropping, and it recovered with the market, but it also got a kick from lower interest rates. Okay, and the interest rates kept going down. Then we had COVID, and obviously then it had another panic attack where everything got sold off. But for a while there, the long-term rates stayed at around, so you see, 1-2%. So they went right back up to where they should have been. And then you can see as long-term rates started increasing, they started selling off. Okay, then basically long-term rates dropped a bit and they dropped up. And then you can see longer-term rates have just sort of been in that sideways action that we've been looking at. But the actual property prices, the REIT prices have gone up. So if you think the bias of this is up, then that needs to come back down. Okay, so we've got it at the top of a range. The same if we go to SLF. I think this is an ETF that tracks the property REITs. You can see it's at the top of the range, sitting right on. So this is a bit of a pre-warning. Get yourself thinking about it, because that technically looks pretty ugly. The same goes for the VAP ETF. We're at the top of the range, so that doesn't look very healthy either. If we do a quick benchmark of the King divided by VAP, you can see the King's about to break through this resistance line, which means the King's outperforming, being MVR. Now the darling, GMG, which I like. Like I like it's good industrial property, warehouses, data centers, but you're paying 37 times earnings for basically an income flow, a rental income stream. You're not, so you're paying for the concept here, and it's my understanding it's only paying a 1% yield. So feel free to correct me if I'm wrong, but that looks like it's falling over. So the King MVR over GMG. Well, what would you do if that was a share? Would you buy it or sell it? Up to you. So GPT. So we'll go through some of the big ones. So GPT. So they office and shops. Negative earnings. I've got here in my notes. They're right at resistance level. Interestingly, the King is not conclusive there. So that's an interesting one because not a big fan on offices with work from home policies and negative earnings. But anyway, the King hasn't got him yet, so it is what it is. Okay, Dexus, so they're purely office space, so that's why they haven't bounced, because they've got empty office space. So I guess there's not much to fall there. The King over Dexus, the King's sort of starting to take off, but he's not conclusive there. Charter Hall, so they're high quality office, long-term leases to corporate and government governments, industrial and logistics. So again, in the right space, P of 26, so it's not cheap. Sort of getting to the top of their range. How does it go against the King? So, well, it's not really conclusive yet, so just take it as it is then. So Dexus is a industrial, so this is industrial properties, so again we'll pay you 15, so that's reasonable. And I've got a note here of 5.5, so that doesn't look too bad. But for some reason the King's got him quite convincingly, so it is what it is. Region, so they're retail focused, or the convenience, so the neighbourly shopping centre with Woolies and Coles, so that's, I like that. And technically it's not a sell, and find support and bounce. So MVR over region, well, it's not convincing. Charter Hall, so again we're at resistance there. So Charter Hall's convenience retail stores, neighbourhood shopping centres, Coles and Woolies again. P of 13 and distribution of 6, so that's pretty attractive. So it could break through resistance. But again, you've just got that long-term interest rate theme. MVR over CQR, so nothing convincing there from the King. ARF, so they own, develop and manage social infrastructure assets. Oh yeah, this is the one with childcare, 260 long day childcare. I like that one. Be government funded one day. It probably is. So the King over ARF. Oh, he hasn't made an impression. INA. So they're an operator of affordable rental, lifestyle, holiday accommodation, targeting the growing seniors market. So that's growing. So it's in an upward channel. So it might just be coming for a pullback. I like the concept. So MVR over INA. So he hasn't killed it yet. So, alright, so there's really just a general warning because there are somewhere there. I guess the, I know this is a pretty popular one, the old Goodman Group, and in general. So Goodman Group and VAP, I think, are popular ones, and they just look like they're gonna fall over. And there's someone waiting in the wind. There's a tank, a king, waiting to save you. All right then, that's the industrial REIT property wrap. Let us know your thoughts.